As the investment landscape evolves, the UK capital markets must adapt to new opportunities and challenges. Richard Stone, the Chief Executive of the Association of Investment Companies, told us how investment companies are helping to shape the future of investing and encourage wider market participation. Richard, investment companies, this has a history going back some 150 years. Why are they important to the future?
Well, I think if you go right back to the roots of investment companies, they were pioneers. They were giving every investor, your man in the street, access to investments and assets that they wouldn't otherwise be able to get access to. And so that's as relevant today, frankly, as it was 150 years ago. And when you look at why they've been so successful, they have some inherent structural reasons. The fact that it's a permanent pool of capital, the fact that they can borrow, they can smooth their income, they can be fully invested in the underlying assets. There's a number of reasons why they have the potential to outperform. And ultimately what investors are after is performance. And so that really helps. They're giving investors access to active asset management, to diversified portfolios. If you're not sure where to start, picking a particular company, a single equity on its own can be a daunting task, and it's probably not the right thing to do anyway in terms of putting all your eggs in one basket. An investment company diversifies that risk, invests itself in a whole range of different companies, and so again can help you in terms of building your portfolio. So it's a great place to start too.
Okay, so how can the UK capital markets be revitalised to attract more companies but also investors?
Yeah, there's a couple of aspects to that. In terms of investing more companies, I think part of it's about regulation, better regulation, and we've already seen some good moves in terms of the listing rule reform, reforms to prospectuses to make it easier for companies to raise new or more capital. I think there's a real role for everybody in financial services, us as a trade association, but everybody to be talking more positively about public equity and about the overall good that it can do. And for investment companies, there's giving access to infrastructure, renewable energy, the net zero transition, all the things which are key to both the government's agenda, but actually investors' agendas as well.
So when it comes to access, particularly democratising access to investments for us, everyday investors, what role do you think investment companies have to play in this?
In terms of the history of the sector, it's always been about giving investors access to new asset classes they perhaps can't necessarily readily access themselves, even if that's a portfolio of other listed companies. The active asset manager is doing the research and sourcing those potentially in geographies and markets that you can't readily access yourself through some of the platforms that are available. I think part of the challenge, research we've done suggests that 86% of people don't know where to start in terms of investing, and 85% find it just way too confusing. I think the joy of an investment company is it's effectively a ready-made portfolio. You've got the asset manager there deploying their expertise to pick the underlying investments for you. Investment companies can bridge the gap effectively between a public market and private assets and give investors access to those assets they wouldn't otherwise be able to get access to. And that's the whole part about democratising.
What changes do you think are needed to enhance the UK pension investments and also improve returns compared to other countries?
Yeah, there's multiple elements of research out there which demonstrate that the UK is lagging in terms of returns, certainly, contributions to some extent, but we have one of the largest pension pots in terms of total pension savings in the world. The main one is just increasing the level of engagement and awareness. Again, research we've done suggests that 1 in 10 people don't even have a pension, and another 1 in 10 who do don't ever review it. And I think if you can drive that level of engagement up, then people are taking more of an interest in what it's invested in. They will naturally demand more investment in the domestic market, more investment in companies they understand, more investment in small and medium-sized enterprises that they can see in the world and the economy around them, and it feeds itself over a period of time. So we need to do more to increase the level of engagement. And you might rightly ask me, well, what more can we do? I think there's a big piece around financial education. It's about savings plans, ultimately. You're saving for your future. You need to nurture it. You need to engage with it. Are you contributing enough? What are you going to do with it? What's it invested in? Is it delivering the returns you need? All of those things, you've got to take an active participation, particularly in a defined contribution scheme, as compared to the defined benefit scheme that perhaps your parents had.
Richard Stone, thank you very much indeed. Thank you.
Thank you.